Ira Epstein with your Morning Flash Update. And this update is for the morning of Wednesday. And we're at the 18th now of January 2023, 8:25 a.m. and a host of economic data to talk about. But when we look at the markets, all the metals to the upside, and upside strong. Interesting day there. Dollar getting beaten up and beaten up bad. That's part of the economic data that you're going to see. We're getting a slowdown in certain areas, and that's going to take the Fed probably and just keep them at that 25 basis point hike is my guess. Grain started off strong. You're 16 cents off the high in the beans. They had hit the upper Bollinger Band, and they're turning back is what I think is going on. Look at this big jump in the energy prices here, not in natural gas. Now, natural gas is so interesting. First, we've had mild weather. That'll change in America. They're already saying that Chicago will get back to a more traditional weather pattern maybe next week. But remember, we're already getting at next week. We're coming to the end of January. So that gives us in Chicago 2 rough months. February, which is always a cold month, and part of March. And March can be anything. You can be 70 degrees, you can be 30 degrees in March. It's all over the board here. But I bring that up because Europe, and I think you realize this, the weather that Russia was counting on just didn't happen. And like me talking about the weather in Chicago, they're already in mid-January. Yes, it can get much colder, but the demands for natural gas crashed. And with it, natural gas prices from their peak down like 80%, that took the pressure off them. So that's going to keep their banks, while they'll have to fight inflation to a degree, their energy reliance is very different than ours. Crude is still going to be a problem for them in pricing. Thank God in America we have a certain amount of self-reliance because we produce quite a bit. They have to import it, and these prices will definitely keep the banks there having to stay, I think, a bit stronger than that of the what people might think. That probably gives the euro a bit of a bounce, and as you can see, here we are. We're pushing the 110 zone already, so this market is coming up as well. You know, one of the things I said to you was we have a lot of data. First, look at the blowout numbers on the mortgages. You're at the index, up nearly 28% increase. So what happened? Well, interest rates went back down to near 6.25%. And that brought everybody out. And you can see the purchase index up 24.7. The refi index went crazy. So people that have to do things, they're doing it, and they're taking advantage of that window that opened up. And as you know, interest rates haven't been climbing since this point in time, January 13th, which will be interesting. Then we get to the PPI numbers. The market was expecting down 1/10, 5 times as much. Down 0.5. That's great. The Fed's going to like that. December PPI, up 1/10. They expected that. Personal consumption, they want to see that. That goes hand in hand with retail sales, which were down. Now, we have to get our numbers from the big companies to find out what happened with December sales. But the fact that November was unchanged at a negative 0.6, and now you're down 1.1%, I think you had a softer Christmas than a lot of people think. We'll see if that comes out to be. The Federal Reserves, they're going to release their monthly industrial production numbers now. I'm on now, but I couldn't put that on, so I'll go take a look at that, and we'll see where that is going to carry everybody. The National Association of Home Builders, that's coming out at 9 o'clock. Will they see something better off the same type of event that just happened with the mortgages? The Fed Beige Book by the regions will come out at 1 o'clock, and we'll get API numbers today instead of Tuesday because of the holiday that we had, Martin Luther King Day, on Monday. So it's a very interesting market. We've just opened, so now you're getting to see how the cash is adjusting to everything. I find it rather exciting. I want to remind you, if you're new to futures trading and you want to learn, we have our futures trading kit, and it's a full kit. You're going to get charting software in it. You're going to get different brochures from the exchanges all through this type of kit. You're going to find out about the 10 different chapters we have. I give you a brief course on what futures are about, how to work with it. We'll give you tools. We're going to give you charting patterns so that you can print these out, keep them right on your trade desk, and you see what the patterns typically look like. I wrote this years ago, The Cause and Effect, when Paul Volcker was the chair, and it talks about M1, M2, M3. Then my different courses, both pivot points, Arun indicators, free. They will be in this. You can see how this all comes out here with those patterns, and yes, you can look at it. And part of the kit is we're going to give you a mobile app that you can work with. As I said, we link right into the exchanges. So all the courses they have, and there are multitudes, hundreds, we make them available to you through their link right through there. So how do you get all this? It's simple. You can either call my staff, they'll have it to you as you're on the phone because they'll send you the links for everything. You can go to our website under free offers, or I'll try to make this work. TubeBuddy's still having the problem, but up here I can manually, I think, put in the link for you, and I'll try to get that done. In any case, I'm Ira Epstein. I'll see you at the end of the trading day. It's a pretty exciting day so far. Talk to you later.